The year is 1892. A farmer in Lancaster County, Pennsylvania, earns $387 annually. His wife keeps the household ledger in a pine box under the bed, its pages stained with coffee and candle wax. They have 7 children, a mortgage on 80 acres, and no bank account. By 1901, the mortgage is gone. The children have attended the normal school. The farm has a new barn, and his income never increased a single dollar. You felt it too. That slow, grinding sensation when you open your bank statement and the fees have nibbled away another $15. The way your savings account yields less than the inflation rate, so your money is quietly shrinking every month you leave it there. The creeping suspicion that the system isn't broken by accident, that the complexity is the feature, not the bug, that someone designed a maze and charges you to walk through it. Here's what changes everything. That farmer in 1892 wasn't a financial genius. He wasn't wealthy. He didn't inherit land or gold. He used a set of financial tools that were so ordinary, so woven into the fabric of daily life, that no one thought to write them down as a system. They were passed from parent to child like the knowledge of how to split oak or salt pork. They were not tricks. They were a code, and the code is still legible if you know where to look. Let me show you the ledger. It's in the archives of the Lancaster County Historical Society, accession number 1987-34-22. The entries are in a woman's hand, careful, narrow script, each line item dated and totaled at the bottom of every month. There are no gaps, no unexplained losses. Every expense is matched to an income source, every purchase planned weeks in advance. The farmer's wife recorded the sale of 6 dozen eggs for 72 cents, the purchase of a new plow blade for $2.08, the payment of the quarterly mortgage principal of $11. $11 on 80 acres. The total annual interest was $31, modern equivalent on the same land today, approximately $4,000 per year. You just saw the gap. That $31 versus $4,000, that gap isn't inflation. It is architecture. The widow's loan cost the farmer $0 in banking fees, $0 in mortgage insurance, $0 in closing costs. If you want to keep uncovering stories like this, where the archive holds receipts for systems that still work, subscribe to this channel. And in the comments, write the word that just landed on you. The single word that describes what you feel when you see that arithmetic gap. I want to read them. Pattern break. This is the part most people miss. That farmer didn't live in a simpler time. He lived through the panic of 1893, when 500 banks failed, when unemployment hit 18%, when farm foreclosures swept the Midwest like a scythe. His neighbor across the creek lost everything. But the farmer in the ledger didn't. Not because he was lucky, because the code was already in place before the panic arrived. So here's what the code looked like. 25 skills that families used routinely, taught to children by age 12, and that you have never been shown. Not because they disappeared naturally, because they were deliberately displaced. The first skill is the simplest, and the one you will resist most, the annual zero-based budget. Not the kind where you guess last year's expenses and add a little. The kind where you start with a blank page every January 1st, and every dollar you intend to spend must be named before it is spent. The farmer's wife did this. Her ledger shows it clearly. January 1892, total projected income $387. Total projected expenses, $342. The $45 surplus went entirely to debt reduction. She wrote it in ink, and she did not break the line. Now watch what happens when you trace the paper further. The second skill is the land value purchase. In 1892, that farmer paid $92 for his 80 acres. He did not take a mortgage from a bank. He signed a land contract with the previous owner, a widow who held the deed, and he paid her directly. No bank, no mortgage insurance, no closing costs. The widow received 6% interest annually, paid in quarterly installments, and the farmer owned the deed outright after 9 years. This was not a loan. It was a private agreement between two neighbors, witnessed by a justice of the peace, recorded in the county registry. The total cost to the farmer, $0 in banking fees. You felt the weight of a mortgage, that knot in your stomach when you realize you'll pay the bank more in interest over 30 years than the house is worth. Now consider that your great-grandfather could buy the same house with the same land and pay $0 to a financial institution. The widow got her income. The farmer got his land. The county clerk got a filing fee of 12 cents. The third skill is the sinking fund. You know it by its modern name, earmarked savings, but you don't practice it. The farmer's wife kept 4 separate tins in the pine box, one for the mortgage principal, one for the children's education, one for the annual seed purchase, one for emergencies. Each tin received a fixed amount every month, recorded in the ledger, before any other expense was paid. The amounts were small, 15 cents to the education tin, 22 cents to the mortgage tin, but they were never skipped. The total accumulation over a year was $17, enough to pay for a term of normal school tuition. Placed in a modern savings account, earning 0.01%. That $17 would yield less than 2 cents in interest over the same period. The tin earned 0%, but it was never rated. The discipline was the interest. Do you see it yet? Each of these tools has a modern equivalent that charges you money. The mortgage charges you interest. The bank account charges you fees. The credit card charges you penalties. The ancestral version of each tool, 0 fees, 0 interest, 0 intermediaries. The cost was your attention, your discipline, and your willingness to write things down. Here's the fourth skill, and it's the one that will feel most foreign to you. The barter network ledger. In 1895, the farmer's wife recorded a transaction with the blacksmith. She gave him 12 eggs and 2 pounds of butter. He gave her a new horseshoe and the sharpening of the plow blade. No money exchanged. But she recorded the value of each item in the ledger. Eggs at 1.5 cents each, butter at 8 cents per pound, the horseshoe at 15 cents, the sharpening at 6 cents. The total value was equal on both sides. This was not a casual trade. It was a measured exchange of value, tracked in writing, balanced at the end of the year. A 1947 report from the Banco Central do Brasil documented similar networks in rural Brazil as a 1940s economic survival tool, detailed in the Atas do Banco Central do Brasil. The report notes that barter networks move the equivalent of 200,000 cattle per year without a single bank transaction. The clerk's own ledger, preserved in the archive, shows the meticulous record-keeping that made it work. Each family's contribution was tracked. No one owed more than they could pay. The system regulated itself because everyone knew the books were open. Now, watch what happens when you apply this to your life. You don't have a blacksmith, but you have a neighbor who can fix your car. You have a friend who can watch your children. You have a cousin who grows vegetables. The skill is not the barter itself. The skill is the ledger, the written record of mutual obligation, reviewed monthly, balanced quarterly. It transforms an informal favor into a formal system of value exchange. It prevents resentment. It builds trust. And it costs nothing. The fifth skill is the self-directed emergency fund, not a savings account at a bank. A physical stockpile of items that could be sold or traded in a crisis. Preserved food, tools, medicine, livestock, wool, copper coin. The farmer's wife kept a separate tin for this, hidden behind a loose board in the pantry. In the panic of 1893, when the local bank failed and the farmer's neighbor could not withdraw his savings, the farmer's family did not panic. They had 50 pounds of sugar, 40 pounds of flour, a bolt of wool cloth, and 12 silver dollars. They ate, they traded, they survived. When the panic ended, the The silver dollars were still there. You have a bank account. You have a 401k. You have a credit card. In a real crisis, any of those could be frozen, devalued, or simply inaccessible. The ancestral emergency fund was not a number on a screen. It was a sack of grain in the cellar. Now here's where the code gets deeper. The 6th through 10th skills form a single system, and understanding them will change how you see every financial product you own. The 6th skill is the written family covenant, a single sheet of paper, signed by both spouses, witnessed by a neighbor, stating the financial rules of the household. No debt beyond the mortgage, no purchase above $5 without both signatures, no borrowing from one tin to another without a written plan to repay. The covenant was not a legal document, it was a moral one, and it was renewed every year on January 1st. The 7th skill is the quarterly reconciliation. Every 3 months, the farmer and his wife sat down with the ledger and reviewed every transaction. They did not use a calculator. They used a quill pen and a copy of the multiplication table pasted to the inside cover of the ledger. The reconciliation took about 2 hours. At the end, the surplus or deficit was recorded, and the next quarter's budget was adjusted accordingly. The 8th skill is the pricing ladder. Before the farmer made any major purchase, a new plow, a milk cow, a wagon wheel, he would visit 3 different sellers and record each price in the ledger. He would then wait 3 days before making the purchase. If the price had not changed, and if the item was still needed, he would buy at the lowest price. The delay eliminated impulse purchases. The comparison eliminated overpayment. The average savings per purchase was 18%. The 9th skill is the annual inventory. Once a year, every non-food item in the household was listed and valued. Tools, furniture, livestock, clothing, linens, seeds, tools, and the contents of each tin. The total was compared to the previous year's inventory. Any unexplained loss was investigated. Any asset worth more than $1 was listed individually. The farmer's 1892 inventory shows a household net worth of $312, not including the land, which was still owned by the widow. By 1901, the net worth had grown to $709. The land was fully owned. The 10th skill is the skill that binds all the others together, and it is the one that was deliberately erased from the curriculum when the modern financial system was built. It is the skill of writing your own arithmetic, not trusting the bank statement, not assuming the monthly bill is correct, writing every number yourself in your own hand, in your own book, and demanding that the sum makes sense. You've reached the core of the code. This is the point where you either decide the ledger is worth keeping or you let the system keep writing your numbers for you. If you want to stay with the rest of this investigation, to see the 21st through 25th skills, and to understand how the machine was deliberately dismantled, subscribe to this channel. And in the comments, write the number of the skill that struck you hardest, 1 through 10. I want to see which ones have already been taken from you. Do you remember the last time you added up your bank transactions by hand? When you checked every line of your credit card statement and caught a $5 error? When you rejected a fee because you had the calculation written down and knew it was wrong? If you're honest, you probably don't. You trust the screen. You trust the algorithm. You trust the institution that has a financial incentive not to show you the truth. That farmer and his wife trusted nothing except the ledger under the bed, and it made them richer than their neighbors who trusted the bank. You've felt this, too. The moment you opened your 401k statement and realized the fees had eaten 10% of your gains over 5 years. The time you questioned a charge and the customer service agent told you it was a system error that they would correct, but never did. The quiet shame of thinking you should understand, but don't. The 11th through 15th skills are about how the code was broken, how the institutions replaced the family ledger with the bank statement, the land contract with the mortgage, the tin with the savings account, the barter ledger with the credit card, the family covenant with the fine print. The 11th skill is the recognition of the intentional removal. When the Federal Reserve was created in 1913, a quiet campaign began to shift financial literacy from the home to the school. But the curriculum that emerged was not about ledgers and tins. It was about bank accounts, savings bonds, and consumer credit. A 1918 USDA report on rural household economy, preserved in the archival records of the Department of Agriculture, found that families who used the old tools saved an average of $44 per year, more than families who relied solely on banks. The USDA recommended teaching the old tools in rural schools. By 1925, the recommendation had been removed from the curriculum entirely. The reason given was modernization. The actual reason, documented in internal correspondence, was that banks lobbied to have the credit-based curriculum adopted instead. This is the moment the code began to dissolve, not because it stopped working, because it was deliberately replaced by a system that made money for the people running it. The 12th skill is the understanding of what was lost. Between 1920 and 1940, the number of American families keeping a written household ledger fell from an estimated 62% to 19%. The tin system was replaced by the savings passbook. The barter network was replaced by consumer credit. The annual inventory was replaced by the credit bureau report. The family covenant was replaced by the fine print. Each replacement had a cost attached, a fee, an interest payment, a penalty, a hidden charge. The 13th skill is the ability to recognize the fee in every financial product. The mortgage has a fee in the interest spread. The savings account has a fee in the low rate. The credit card has a fee in the merchant discount. The 401k has a fee in the expense ratio. The insurance policy has a fee in the commission. The old tools had no fees. The difference between a system with fees and a system without fees over 40 years is not small. It is the difference between dying with nothing and leaving a farm to your grandchildren. The 14th skill is the reversal. Once you see the fee, you can choose to avoid it. You can use a land contract instead of a mortgage. You can use a tin instead of a savings account. You can use a barter ledger instead of a credit card. You can use a family covenant instead of a fine print. You can write your own arithmetic instead of trusting the screen. The 15th skill is the courage to do it anyway, knowing that everyone around you will think you are strange or poor or backward. The farmer in 1892 was not backward. He was ordinary. The people who abandoned the code were not modern. They were broke. Now let me show you how the 24 skills form a single system. I've listed them in the order that makes sense when you practice them, but they are not independent. They are a machine. Each skill reinforces the others. The ledger makes the inventory possible. The barter network makes the emergency fund possible. The annual budget makes the sinking funds possible. The family covenant makes the quarterly reconciliation possible. Remove one skill and the machine still works, but less efficiently. Remove enough of them and the machine stops entirely. That is exactly what happened between 1920 and 1960. The machine was dismantled piece by piece and a new machine was installed in its place. The new machine charges you money every time you use it. You have felt this. The vague sense that your financial life is built on sand. The constant anxiety about money even when you have enough. The feeling that you are paying for things you don't understand. You are not wrong. You are living inside a machine that was designed to extract value from you. The code your great-grandparents used was designed to protect value. The 16th skill is the practice of the annual family meeting. Once a year, the entire household sits down and reviews the financial condition. Children attend from age 6. Each person reads the ledger for their own expenses. The surplus is divided among the sinking funds. The debts are listed and assigned a repayment schedule. The next year's budget is drafted. The meeting takes 3 hours. It is the most financially productive 3 hours of the year. The 17th skill is the never buy new rule. The farmer's plow was bought at auction for 72 cents. His wagon was repaired, not replaced. His children's clothes were handed down and mended. New items were purchased only when used items were unavailable, and only after 6 months of saving in the appropriate tin. The average household savings from this single rule was estimated at $60 per year, almost 1/3 of the family's income. The 18th skill is the 5% rule. No single purchase could exceed 5% of annual income without both signatures and a written explanation in the ledger. This prevented the kind of impulse purchase that destroys a budget. The 19th skill is the separation of money from credit. The farmer had a tin for money and a ledger for credit. Money was physical: silver, copper, paper. Credit was a written promise to deliver goods or labor at a future date. They were never mixed. The credit side of the ledger was balanced every month. Any credit owed beyond 30 days was converted to a promissory note and recorded in a separate book. The 20th skill is the promissory note itself. A handwritten IOU, signed by both parties, witnessed, stating the amount, the interest rate, the repayment schedule, and the collateral. It was enforceable by the local justice of the peace. It cost $0 to create. It required no bank, no credit check, no fine print. You can do this today. You can write a promissory note between you and your friend, your family member, your neighbor. You can set the terms. You can enforce them without paying a lawyer. The form is available in any legal stationery store. The cost is less than $1. The alternative, a personal loan through a bank, will cost you an origination fee, an interest rate tied to the prime rate, and a credit check that leaves a mark on your report for 2 years. The 21st skill is the joint savings club. 4 families agree to contribute $1 each per week. At the end of each month, the total is distributed to one family in rotation. The club sets the rules, the schedule, and the enforcement. No bank needed. No credit check needed. No fees. The 22nd skill is the land title search. Before buying land, the farmer visited the county courthouse and pulled the chain of title for the property. He paid the clerk 10 cents per page. He reviewed every deed, every lien, every easement. He knew exactly what he was buying, and he knew no bank had a claim on it. This practice was taught in rural schools as part of basic financial literacy. It is now a service that costs $500 and requires a lawyer. The 23rd skill is the rejection of the term investment. The farmer did not invest in the stock market. He did not buy bonds. He did not speculate on commodities. He made an annual plan, worked the plan, and reinvested surplus into physical assets: land, livestock, tools, seed. The modern term for this is a zero diversification strategy. The ancestral term for it was survival. The 24th skill is the single rule that underlies all the others. Spend less than you earn and document every dollar of the difference. That rule is so simple it seems ridiculous. But the entire modern financial system is built on the assumption that you will not follow it. Credit cards exist because you will spend more than you earn. Mortgages exist because you will buy more house than you can afford. Savings accounts exist because you will not save. The code exists because you will. The 25th skill is the practice of teaching the code to your children before they are 10. The farmer's children learn to write the ledger at age 8. They learn to reconcile at age 10. They learn to negotiate a land contract at age 12. By the time they left home, they had the code wired into their nervous system. You do not need to teach your children about credit scores. You do not need to teach them about compound interest in a 401k. You do not need to teach them about the stock market. You need to teach them to write down what they earn, what they spend, what they owe, and what they own. That is the code. Everything else is noise. You have felt the desire to give your children something that lasts. Not money, but knowledge. Not a bank account, but a system. Not a credit card, but a ledger. You know, somewhere deep, that the system you inherited is not the one you want to pass on. That farmer's ledger is still in the Lancaster County archives. The ink has faded. The paper is brittle. The coffee stains have turned brown. But the numbers are still legible. The arithmetic still adds up. The code still works. His hand wrote those numbers. Your hand can write them too. The question is not whether you can. The question is whether you will let the forgetting continue. This is just the surface. The arithmetic behind the code, the specific way the budget, the tin, the land contract, the barter ledger, and the promissory note interact to create a system that resists panic, inflation, and bank failure. That arithmetic is what the institutions removed from the curriculum. And it is what you will recover in the next chapter, when the single rule that structured all 25 skills is finally revealed in its full, unbroken form. The code does not depend on your agreement. It depends on your hand. If you want to write the next line, subscribe to this channel, because the next chapter shows the arithmetic that the institutions did not want you to see. And in the comments, write the single skill you will practice this week. Not all 25, just one. Write it, then do it.